Broadcast is now starting. All attendees are in listen-only mode.
Hey, welcome all to a special Coleman webinar with Darren Hecht, Biz2X. This is going to be great. First of all, I love your title, Darren, Head of Growth. Good, I love that. What does the Head of Growth do? Help me out here.
Head of Growth is responsible for all of our growth initiatives, right? So from a sales, business perspective, business development perspective. So, sort of fintech companies, it encompasses sales and more, right? In terms of just leading our growth initiatives for Biz2X.
Well, I know you're going to talk about your product, but this is a great program you've put together. You're going to talk more about the what's going on and how best to adapt given the current challenges facing everyone with your product. So that's going to be cool. Let's see. Let's go. I believe we have some poll questions. Joseph, you want to go right to those?
Hey, Bob, maybe I could just I'll do a brief introduction maybe to start.
A brief introduction and we'll dial the poll. Go ahead, Darren.
So let me just share. Could everyone see my screen, Bob?
Okay.
Is this coming through?
Yeah, looks good to me.
Okay. So for today's webinar, before we get to the poll, which is very interesting, I'm really excited to see those results. Really, we wanted to cover a few different things, right? Firstly, I'll start with a quick intro on Biz2X technology and how we support SBA lending. There's been a lot of changes within the SBA regulation recently. I think, since PPP, there's certainly been a lot of developments. So really wanted to touch on, with Bob, some of the different developments that have happened, some of them that are still pending and how that can potentially impact your SBA program. We'll cover some common pain points that we hear a lot from SBA teams and really what is the operational impact to the organization using some of the current processes that teams are often using for SBA lending, and then how technology can really support SBA programs' efficiency and growth. Before I do so, I'll give a brief introduction. So as Bob mentioned, I head our growth team at Biz2X. And so if you're wondering what Biz2X is, we actually got our start as a direct small business lending fintech company since 2007. And we worked a lot on the small business side. And one of the main differences, since we're not a bank, is really we have to take sort of a different population of borrowers. A lot of times they could be immigrant businesses. They could be people that went to a bank and really couldn't obtain financing. And so in order to compete in that segment, we have to be able to intake information very quickly. We have to pull it in. We have to be able to respond to a decision within 48 hours. And we spent a considerable amount of money on our technology investments in the cloud in order to do so. And then several years ago, we launched a division called Biz2X that is really focused on white labeling our lending technology for financial institutions and other lenders as well, right? And so we can really harness some of those experiences that we've had, some of the data that we have on small businesses to really help us deploy a white label technology within the lending space for origination for different types of lenders, financial institutions, and so forth. We're headquartered in New York City. We're actually right across from Madison Square Garden. I'm looking out the window right now. And we have about 700 people or so at the organization. I would say most of the organization is focused on the technology and development side. We have data scientists, we have a lot of developers, engineers, product people, and I would say the majority of our staff here in New York is focused on really client interactions, implementation, and so forth. But we've invested pretty heavily in this space, and one of the benefits is, in the cloud is, we can do certain updates, right, and our clients can benefit from those. And we often test and learn things on our direct side, new integration partners, new ways of doing things, and we get a lot of feedback from small business, and that helps us also bake that into our white label platform for financial institutions.
Darren, what I like is, you're fintech, but you've been around since 2007, which means you have all that data from the Great Recession, 15 years worth of data and experience, and you certainly have managed through an economic downturn. So that makes your experience that much more valuable versus other companies that are new to SBA lending.
Yeah. No, I think one of the key differences is, the stability, as you mentioned, right? There's a lot of fintechs, and do you want to partner with a vendor that, is in grow mode, but is not profitable and may not be able to support you? And, most of the partners that we work with, right, it takes them, several years to get comfortable, really start using the technology, and they want it to be a long-term relationship. So that really plays into it. So it's a good point. One of the things that we do is we have a lot of data assets. And so I'll get into maybe a little bit later on, how that can potentially support our partners with some of the data that we have, how that can inform things like scorecarding. I know we'll touch on maybe some of the new SBA regulations in the poll question around like using, best practices or bank scoring models, right? The SBA has indicated they want to open that up a little bit more. So that can be something that can certainly support those loans that are applicable to that. And then finally, we've been recognized by the Financial Times, Deloitte, and the Inc. 5000 as one of the fastest growing private companies. So maybe, Bob, do we want to get into the poll real quick?
Sure, let's do that. Give a sense of your fellow attendees. Help Darren out a little bit in crafting his presentation on the fly. But this is a great question, Darren. What new SBA regulation, and there are a number of them, and the good news is I'm telling you already, you can select them all if you want, but select the ones that are most important, but are on the top of your mind for your SBA team. Darren, this is a great question. There are no secrets in what we do. It is all execution. It is all planning to meet those challenges that are facing us. And we would like to know, what are you most concerned about? 67%, removal of the authorization beginning August 1. Darren?
Yeah, let's go to the second one, and then I'll give some feedback on some of these items.
Sure.
There's another poll question.
What are the biggest pain points you face? The latest regulations we talked about. Time consuming to follow up borrowers and process loans. Yes, we've been dealing with that since the beginning of time. Finding, hiring, training experienced staff, and using technology that's outdated. And I always try to remind people, Darren, the pace of technology is tremendous. And what we're talking about today is significantly different than what we had 4 years ago. And there it is, keeping up with the latest changes. And I would have gone with the time-consuming process, just getting all the information we need to get a loan approvals and to get the money out to our clients.
Yeah, so I think these are interesting points. One thing I wanted to share is a lot of times, there's sort of a fallacy that when, things are growing as an SBA department, let me just make sure you can see my screen. It's still up?
We're on survey question number 2. There you go. Technology helps solve. Go for it. You're in good shape.
Yeah. So, really, as far as new regulation changes, certainly a moving target, lots of changes. Technology can actually really help you put some guardrails around it, right? So for the most part, things like the forms that are in the SBA platform, right? Those are updated. Knockouts, use of funds, eligibility, pre-qualification. So, there's nothing is going to ever replace an experienced SBA underwriter in terms of some of the real deep nuances. But at a surface level, if we can clean up certain aspects, make sure we're getting the right information, determine eligibility, and do that pretty quickly, that also helps, really support the credit staff, including checklists that may be situational. So one thing that can be done is you can have your checklist dynamic based on the situation. So if it's a business acquisition or it's over under a certain size SBA loan and there's more due diligence required, maybe you need, a full personal financial statement or additional collateral for larger loans. Those things can be programmed in the platform so that it prompts it and helps guide the SBA staff as well. So technology can certainly support that. As far as, the time consuming aspects to process a loan efficiently, I'll cover this in a slide that we have in a few minutes, but at a high level, we're seeing a lot of wasted time. So we engage with financial institutions of all sizes, right? So from community lenders all the way up to regionals, super regionals, and some larger banks. And really a lot of the time is wasted. We see banks on their website might have an intake form that someone will call them back, or it might be some light application if it is digital. But really what that leads to is a lot of back and forth, because there's always a nervousness to ask too much of the borrower up front. But then, the counter to that is you're not getting what you need to actually process the loan, and it's not really tailored for SBA lending. Right? So there's a lot of lenders that we work with that might be using legacy systems or commercial systems to try to process SBA loans. And, with the branches still originating for the most part, or BDs, most of the SBA origination, right, it's just leading to a very inefficient process. So very time consuming to get to the point that you can actually start underwriting the loan. And that's something technology can help with. Something we hear about a lot at, SBA shows, and certainly as SBA has become a little bit more in the news, right, since PPP. And I think a lot of banks are trying to take advantage of SBA lending, right, because of that guarantee and really to help expand access to capital. Really finding, hiring, and training enough experienced SBA staff is certainly a challenge, right? We attend a lot of NAGL shows at times, and I see certain people I know, and they might be working at a different bank a few months later, right? So there's such a real need for talent right now. And I think one of the ways a platform can really support is, like I was saying before, situational. Can you put some guardrails around that particular SBA loan, really help the borrower and also help the credit staff really, process that loan more efficiency and guide them in terms of eligibility and other things that loan will need as follow-on items. And so that can reduce the need to add more staff. And because you're making that staff a lot more efficient, you can do more with less, right? So as demands may be increasing for the existing SBA departments, maybe you're sending it to a lending service provider and your growth is getting to the point where you want to really build out your SBA team. And certainly having a platform is the best place to start, because then from the inception, right, you're training your staff on a modern digital workflow versus the old way of doing things. And then finally, using technology that's outdated. I touched upon that a little bit earlier. You may be able to get some of the same piece of information. The guts of underwriting and doing spreading and gathering may be similar. But as I talk to a lot of SBA underwriters and credit folks, it's really apparent that there's a lot of, the workflow of the existing platforms, whether it's fully manual, which obviously has its drawbacks, or it's a legacy system, was really not set up or designed well for SBA lending, right? And if you sort of try to get certain SBA functionality in an existing platform, there's a lot of things that you really don't need for SBA, and there's a lot of things you do need for SBA that you're not able to ingest in that platform. Things like, a government search or running a credit report or UCC or SAMS.gov or CAVERS, or things that you may do as part of your SBA lending process, including submitting to the SBA system without having to key it into the CAF system. And if you're able to have all those things combined, that's what really leads to a much more efficient process. So if I may, one thing I just want to touch on quickly before we get into some more questions is really just, what do we offer, right? Because I did an introduction of Biz2X, but we basically white label the platform. It's the bank's branding. We will put that link on their website. If you want to have it on your website, right, on your bank website, you can put product information on that landing page that speaks to SBA lending as the product you offer. If a borrower wants to apply, they can click that link, and we host that site for them that looks and feels just like the bank's on the front end. And every client will get their own portal where they can save and always come back later and finish the application, right? We also allow banks, because we know a lot of times the relationship managers will have a conversation with a client, either they applied for a traditional loan and they weren't qualified and really their only option may be an SBA loan, or they just want to talk to a relationship manager and say, hey, is an SBA loan the right loan for me? Do I qualify? And if they want to in the branch, another way we set up the platform is they can certainly, the RM can start the application on the borrower's behalf, fill out the information, they can send the link to the client that says, Bob has started the application for me, click here to continue. And so that's a nice way that we can still marry it up with the branch support that most banks are really using today. And so as far as SBA capabilities, so we have capabilities for 7A, Express, 504, microloans, cap lines. We have almost 40 integrations built in, so really handles end-to-end things like tax return, which we can spread automatically in the platform. UCC search, we have the E-Tran integration as well. And then we have some other government searches like SAMS.gov and Cavers that we can also pull back in. So there's a lot of features in there, and really by design, we're trying to keep the underwriter in the platform as much as possible and not have you order all these things offline or have to key them back in. We're not only bringing that data in through the push of a button, but we're also reading those reports. And if something is negative that came back, maybe on a no-fact check or some conflict, right, with some of the third-party verification, we actually surface that in the platform to make it easier for you to identify. So all these things are sort of built in, including SBSS scoring.
Can I ask a quick question? Sure. What is the biggest source or the biggest black hole of the process in terms of paperwork that you found, and how do you guys solve that problem?
Yeah, so probably the biggest, if I can just show here in terms of paperwork, I think initially, most times you're getting an initial intake form, and then that's just leading to a conversation that might lead to a PDF application. Then the borrower fills that out. Then there's a lot of back and forth with, based on the use of funds, the situation, is it a business acquisition, how they plan to use the SBA loan, right? Then there's a whole flurry of follow-up information that many on the call are well aware of, that just lose a lot of time, and so what we're trying to do by design is get you very quickly, be upfront with the borrower, say, this is what we're going to need for your SBA loan, have them fill out aspects of the 1919 form digitally, and we actually reorder some of the questions, but still map it back into the appropriate forms. So that way we can help determine eligibility. And then as the borrower is entering information, we can take what they're answering and actually change the application. We call it a dynamic application. So what we're trying to do is size up the situation as close as possible, so that way there's less need to go back to the borrower. Things like ownership information, do they have affiliates, other entities, right? We're trying to really size those things up early on, so that way by the time they push the button to submit, the bank should really have everything they need to go to work and start processing the application. And that's really half the battle, right? It's just getting to the point where you have what you need.
Great, thank you.
So on that point, where there you go. This is where they lose the most time here. So I would say the most times lost really, like I explained, gathering the information. I would just say determining eligibility, running the third-party verifications, right? So if you're having to order it offline, get the report, log back into the system, then if you have a digital platform, then attach it back in there, you're just losing a lot of time. So if I can keep you in the platform, like I said, and push a button, get all that data back, help flag the data, make sense of it, display it in a way that makes it easier, right? If you're working on multiple applications, which you're often doing at the same time, right? You can sort of get a whole history of what's going on and see or get a notification that something is available now. If there was, let's say, an 8821 order, and that might take a few days, right? You'll get a prompt that is now available. So these little things all add up really to overall improve the efficiency. And finally, I think the financial analysis is a big one. I would say most banks are still using Excel or using some sort of spreading tool, and then manually putting all that information in a credit assessment memo. And that's also another area that we help with by pre-populating all the data that was in the platform that goes into that form, and also helping run some of those spreads automatically. So this is really where I think they're losing the most time when you combine this all together. Bob, you still there?
Oh, I'm here. Yeah. I apologize. I'm just sitting here watching you. I am going off script here. Let's see. The next topic is differences and similarities between large and small banks. I'd also add in there credit unions and non-bank lenders. How do you handle all that? And I have a follow-up question, but go ahead and address that one first.
Yeah, I would say the biggest differences are when we speak to a lot of smaller banks, they say, well, my volume may not be there, or I'm a small bank. Do we really need a digital tool for this process? And I would say the answer is the competition is certainly increasing in the market, right? I think there's been, or I know there's been a lot of talk about opening up more licenses for the SBA to fintechs, but even in general for financial institutions, I think a lot of banks are taking more thought on really, is SBA lending, how important is SBA within the mix of lending products I have now, right? And if a bank is watching sort of their balance sheet, right, having that guarantee or expanding more that can be guaranteed is certainly important. But I think smaller banks, it's more about, if it ain't broken, don't fix it. And usually the setup or the systems that they have are a lot more straightforward. And for us, what we've decided to do is we really have, more of a turnkey product that's been designed more for small banks. It's very easy setup that we can sort of plug into their other systems to make sure the data gets there. But I think a lot of times it's just easier to add headcount, without considering what's the total impact of what a platform can have.
Yeah, and I think my follow-up question is, so I'm the president of a small bank. I want to do SBA. I'm very concerned about the poll question, which is we have high turnover. How does this help my conventional underwriters help become SBA specialists?
Yeah. So I still think, the platform is never going to replace training, but what it can do is, if you're taking someone who's new, maybe they came from a traditional underwriting side and now they want to, join the SBA team, right? And you're like, what are the differences? So I think in terms of, like I said, helping size up the applicant, what's the situation, having these things set in the platform that can guide them, how are the use of funds, what's the situation, what are my checklist item as a credit analyst or underwriter, and what do I need to complete my task within the workflow? And those things can be set in the platform to help guide them. We give each role its own checklist, right? So a bank would define that if it's a junior underwriter, if it's an RM, if it's a senior approver, right? Everyone has their own unique checklist that can be situational dependent as well. And so that helps guide them. And we put that checklist in there, and then you have this short list that you can check off, and that helps you stay on track, and also helps, the ramp time, because now you have some guardrails that can help them understand that based on either the initial situation, or maybe there was a mistake made and they have to correct something, things will change within the platform that will help guide them there. But from a technology perspective, I think small banks, they have a lot fewer legacy systems. It's more of a budget and a justification issue than it is a complexity issue. Conversely, a large bank is going to have a lot of systems, right? So they're more concerned about, what other systems, if I take an SBA specialty system, right? How is this going to talk to my CRM? How is this going to be used in branch? How is this going to feed in, potentially to other systems at the bank? And so, one of the benefits is within the cloud infrastructure where we host our platform, it makes it a lot easier to sort of plug our platform into other systems, right? When things were on, when things were on premises way back, right, where these server farms and banks, some banks still may be maintaining them. Most banks are really moving to the cloud, or have moved to the cloud. And so once you go there and your core system is in the cloud, it makes it a lot easier to start plugging things in. And because we're also on Amazon Web Services, we can easily just plug in the data to other systems. So probably the biggest difference is, you have that level of complexity with larger banks. They need more systems. They sometimes require more customizations of the system. So that's probably the biggest difference there. And I would say, as far as impact, small banks, I think there's more of a growth opportunity. Obviously, if you're doing 10, 20 SBA loans a year, right, another couple loans makes an impactful difference. And I think, certainly having a system can be a competitive advantage for you, because now you're really giving more accessibility to borrowers to apply when it's convenient for them. At larger banks, I think there's probably an even heavier operational impact, right? You have a much larger staff level, maybe higher volume of loans. And so it's even more impactful to have more efficiency with the system than even smaller banks. But I think there's advantages, and there's actually a huge opportunity that I'm seeing, with smaller banks to really modernize.
That's the best answer I've heard in that argument of who's more technologically savvy, the larger banks or the smaller banks. And I love the fact that you bring in the legacy systems, which will be with the larger banks, and the smaller banks can be a little bit more faster, a little bit more adaptive. I like that. Also, I want to challenge you on that. When you say 10 to 20, there's a lot of banks out there that do 1 or 2 SBA loans that they can do 9 to 8 to 10. That makes a significant impact on their bottom line. And they're also using a type of system on there. They're much more comfortable in making these type of loans.
Yeah, one of the things you can do is, so even if our platform covers SBA and non-SBA, CNI lending, CRE, but let's say you didn't have my platform for the other ones and you just wanted it for SBA, right? We offer that because it's a modular platform, but you can always start underwriting a loan for, let's say a CNI type, and then you realize, okay, credit elsewhere has been satisfied here. This borrower is just not eligible. It's against our policies, right? Now you're eligible for an SBA loan. So one of the things that we can do, is really, when we do the connection to your other systems, you can actually push the data in process into our platform. Now you don't have to start at zero. The borrower filled out some of the basic information you needed for your other loan, which you declined. And then that becomes your starting point. Then you can always have the borrower start there and just fill out the differences that they'll need for their SBA. So, really by design, right, for us to be successful as a tech provider, we have to be able to plug into these other things, and we have to have that level of flexibility. But that's another important use case. So that can really help, get more borrowers, to apply for SBA lending by offering it, right, if you determine that they're not eligible for a loan.
Right, and
then
feeling
also,
comfortable. Yeah.
And also expand it. A lot of banks we speak with really have a cutoff size, right? It's just too taxing on the underwriting team to underwrite, let's say, a $200,000 SBA loan. I would say the average used to be around $1 million according to SBA stats. This year, I think it's gone down a little bit. It might be closer to 600 or 700. But a lot of banks are just refusing those small loans. So having a platform, if you can process it efficiently, it may not tie your teams up as much, and you should be able to help those clients because you can decision a lot more quickly and efficiently.
Yeah, and that's going to be fascinating to see when we have the new changes. Those small loans now defined under 500,000 beginning August 1st. So I think that's going to be fascinating. Yeah, I want to talk a little bit about AI. And we had a fascinating article the other day. In Wall Street Journal said 97% of AI can predict hit tunes, and I was a little skeptical. I'm still skeptical. But I'm interested in terms of, look, AI to me is simply just analysis and using technology to help it. I think it's just a different branding, a different tool on how to package this. I mean, you've been using algorithms and data for 15 years. Tell me about AI.
Yeah, so I think AI, obviously with this whole chat GPT, you're seeing in the news, every company wants to do a press release and say, hey, we're going to be leveraging AI, right? It's the sexy thing to do right now.
Right.
AI, simplistically, right, it's really just a dynamic scoring model is the way to think about it. And the accuracy is really only as good as the integrity of the data you're feeding it. You're essentially training a model, right? And the main difference between using an AI scoring model and a classic, let's say, score, is that an AI model is accounting for a lot more data. Mm-hmm. It will reweight itself. So if you think about it, you might be missing some piece of data. Let's say I require a piece of third-party data to finish my scoring, or it's not available. There's nothing on that business, right? So if you take a classic view of, let's say I give you 100 points and a bank says, I want 50 points out of the 100 to be their credit score. I want 20 to be, the type of business they're in, and maybe another 20 or 30 on some of the financials or things, right? And you're sort of just adding them all up together. If you're missing a data point, how do you account for that? What if you don't have something available? Does the weights of those things change over time? How often are you changing those weights? What's the basis of that decision to make it those weights in the first place? Maybe you just used your own population of loans that you have now, or or maybe, you did use some data set to come up with it. So it's not a very intelligent model. And so the differences with AI is we can take a much broader data set. We can train the model to pick particular things that are the most valuable, right? So for instance, like within our model, we picked over 200 features. So even within, credit bureau, you might say, okay, what's the credit score? That's a simplistic way. But what are other signals that come back from the credit bureau of things to look at? What's the trend over time? What are some spreads or things that you may want to add in there from a business cash flow perspective? So what we're able to do is sort of account for all this data. If something's missing, it will reweight itself. And because we have a much broader data set, we've actually tuned the model to really identify what is a dependent variable on risk, so that we can not just have a gut reaction to it or guess of what banks are using. We actually have found something statistically significant that these are the most important variables, right? But one important thing to note is there's always a lot of concern with AI, right? No one wants a black box that, you
took away my question. Go ahead.
Right. That I deploy like an AI solution. You're like, hey, how do I get compliance on board with that? I don't know what it's actually doing. I can't really decision alone off that. What if it's biased? What if I don't understand it? So the way we like to use it in our platform, and potentially it could be something that, some of the new regulation that they're allowing from the SBA to take advantage of some credit scoring models, is really to take the AI scoring in the way that I laid out. And then we have sort of a network effect that over time we can improve the model. So if there's inaccuracies on the model, it will adapt itself. We may find a situation that it led to a bad score. We'll cherry pick that, and we make sure we train the model to correct that. So that's sort of the benefit of having an AI model versus just you coming up with these scoring categories. And then what we'll do is, instead of telling you, hey, take my word for it, this is 100 or this is an 80 out of 100, right? You should use this to base your decision. What we will then do is we actually deploy a configurable decisioning engine. And so what this is designed to do is essentially mimic some of the policies that you have already today. So if your credit team is going through, whether it's an SBA loan and has very specific criteria for SBA, plus your traditional underwriting policies, you may be looking for time of business, looking at the credit report, looking at other spreads or other financial formations, other liens. And so this is just a simplistic representation of the types of rules that you can set, and we can set these rules by product, right? And so then what we would do is we would configure this to the bank's policies or the lender's policies, right? So that way you're fully comfortable with either matching certain policies you have now, maybe you have some other decision tree or rules you want to set. And then what we would say is use the AI score as a part of the overall decision to make it a more effective overall decision. So you can layer this as one rule within the score and just say, all right, if the credit score is over 700 and my BA score is at least an 80, that's pretty good. I will recommend an approval if it passes through all these other rules without triggering anything, right? And so that's the best way where you can take advantage of AI. You're not using a very simplistic scorecard approach, but yet you still have the control to match your current policies and your current way of operating. And we're never telling you that you have to automate, because that's an uncomfortable thing, but you can always just have a recommendation, and even the recommendation will show you each rule, if it passed through, if it's something you might want to investigate further in yellow, or if it's a hard no in red, it's something that triggered a policy that you just can't process that loan or decision that loan, right? And so that way you get best of both worlds. And so that's the way we view it, and the way we've set up our system that can work for SBA or non-SBA. And it's a great thing to take advantage of, because even using it as a recommendation engine, that just saves your teams a lot of time.
So does AI and this platform, does that reduce headcount?
Well, the overall efficiency, may help reduce headcount, right? Really depends on the volume. If there's a decision made or about to be made between adding more staff versus taking a platform, I think a lot of the audience may be surprised that the costs of technology have come down a lot. The speed that we can implement is typically 3 to 4 months, which is pretty fast. And so it may not be worth, just adding more headcount, because that might not be a long-term answer. And so to your question, right, do you reduce staff? I think oftentimes we found our partners that they're just maintaining the existing staff, but yet you have more capacity, and the staff that you have can focus on more important aspects of the decisioning and less time ordering reports or keying things in or chasing down clients. It just makes you a lot more efficient. You can focus on what matters more.
And what matters is big picture, what's going on in my geographic footprint, what is the economy, what are all these other outside factors that are going to determine whether I'm going to get repaid versus being drowning in minutia. That's what I see as the big benefit for what you're talking about.
It's not a good use of time, right? If you have a trained staff and they're able to do deeper assessment, and you don't need as many people involved in the workflow potentially, or there may be certain loans that you simply just say, if it's an express loan, we have a different process, right, in a digital world, and we're going to expedite that application, and we need fewer things from the borrower, and that can all be set on the platform. So you don't have to treat every applicant the same way. You can decide how you want to split those things, and so overall, that's where you're getting the efficiency gain.
I'm a big history buff, and I just what we went through with PPP, I can't wait to start reading the history books on that. But coming out of PPP, I'd like your opinion on this and how this impacts and what you guys have devised. Lenders became much more willing to adapt technology, but now also a little leery because of some of the problems they had. What's your opinion about that, and how does that impact the design of what you are doing?
As far as, sorry, can you repeat the question? I'm sure if
Basically,
I got the question.
What we learned from PPP, how have you adapted that in your programs, in your dashboard?
Yeah, I think PPP, as far as how we've adapted, I think, really having a strong pre-qualification is important, so we're not wasting a lot of time. PPP, the velocity of that program, we had some clients with over 200,000 loans that they were processing with huge teams on the back. In terms of scalability, I think it really tested cloud scalability, right? Is it, how quickly can the system adapt to that sort of velocity, which is unusual, right? No one's ever going to have that many SBA loans all at the same time with that level of staff, and having to decision within that time crunch. So I think it put our teams to the test. If they were releasing new regulation on a Friday, right? We had all these white label clients, and how do we quickly update the system? So it kind of put us to the test very quickly there, and it put our systems to the test of really being able to handle that level of velocity and having it scale very quickly in the cloud to meet that.
One of the things that you have access to that the lenders don't is that you have access to the small business borrower inputting this information and working with the systems. What is your perspective on how that works, and what do lenders need to know about that process for the pain that small business borrowers go through?
Yeah, I think a lot of times, businesses just want to get the decision quickly, right?
Yeah.
Yes. And I think a lot of times banks are nervous that asking for too much up front, right, which makes sense. But if you don't ask for enough and you're not clear on what you actually need to get the loan processed, you're also doing yourself a disservice, because the clients think they're done, they think they filled out the app, and there's all these follow-on items, and it just causes them a lot of frustration. So I think it's really just getting the balance right between what you need from them, being upfront about it, giving them status updates, giving them the ability to log into the portal. Maybe they don't always have to go back to an RM and ask what's going on. They can see the progress of the application, the state it's in. And then if there's something needed, if you can do that systematically and they get an email alert that, hey, you're now required to please visit your dashboard, you have an action item, at least they feel like something's going on, and they may not have to call customer service or call an RM. And that's the preference of some borrowers, right? Maybe not all borrowers want to use the system to that level, but it's available, and others may want that support from the RM, and we have the flexibility for both. But I think that's the most important thing, and especially small businesses, if the owner's filling it out, right, they're just busy people, and if you're going to require them always to come into a branch to complete this process, they may not have time, and it's just not convenient for them. So really, to be competitive in general beyond SBA lending, I think that's something the market is going to demand, and actually leads to a good research, that some analyst firms that I'll share in a few minutes, Bob, on really areas that we're hearing from different demographics and where banks are typically looking to invest in digital right now.
Well, let's talk about that because I'm really fascinated by that. But I agree with you 100%. Small business lenders, borrowers, are more concerned about when do I get the money as opposed to the rate that I pay. That's why you've seen success with the cash advances, with PayPal, with these quick 24-hour funding type of schemes. And the faster the lender can respond, and actually that's what SBA is trying to do in terms of streamlining their systems, the faster the lender can grasp that concept, there's a lot of opportunity there. So I'd love to have you talk about that.
Yeah, so this is really interesting. So BAI Research put out a big white paper. I'm just cherry picking a few interesting things here. So, this is for deposit accounts, right? I don't think anyone's done this for SBA lending, but you have to think, you have to think about it that, whether I want to open a deposit account or I want to take a loan, the expectations are really no different, right? So if you look at the generational differences, I mean, it makes sense. 56% of boomers still want to come into a branch. That's the classic way that it's always been done and what they're comfortable with, right? It doesn't mean that zero boomers want to use any type of digital. It just means that's what they're comfortable with. But if you see over time, there's a big generational shift that's happening where younger and younger generations are obviously digital first, right? That's what they're comfortable with. They're almost born with an iPad now right in front of them. And at least my son is. And so, they're just very comfortable and they may not want to go into a branch. And so you can see the expectations are really changing in the market. Big banks are getting bigger now. I mean, JP Morgan buying, First Republic, there's been a lot of consolidation even before that. And so they have a lot more resources to throw at digital, but it doesn't mean a smaller financial institution or other lender can't take advantage of vendors that are out there that specialize in certain aspects. And that's one of the things I was saying before, cloud really opens it up. If you spend all this money on a cloud infrastructure, okay, that's great, but what are you going to do with it now, right? And so if you plug in different systems like an SBA platform or a consumer origination platform, now you get the best of both worlds where you have specialty platforms to handle all. And, going back to the research, you can see here that's going to be more and more important, and the competition is only going to keep increasing. And we still don't know, what's going to happen specifically with SBA licenses. Maybe the fintechs that get them are going to be focused on working capital for 250, and banks are just not interested in that. But eventually over time, I think that's going to heat up, and at the same time, the expectations are really increasing. And I think technology and modernize is the only way to bridge that gap.
I think there's a great opportunity there. We're dancing around it. I'd really like to be specific on that. I think there's a great opportunity for lenders in that under 500,000 small loan market. Can you talk a little bit about that, and what are you advising your clients on how to attack that market?
Yeah, I think a lot of it, the system is there to be tailored based on what our partner need, right? So if you want to lighten up the requirements for small loan, maybe you don't want some of the things I mentioned before. You don't need collateral. Maybe you don't even want tax. You just want their bank statements, right? Maybe it's under 25,000 at the extreme level. It's a microloan. You just don't want any other information. You want to fast track it, right? The tools are available to not treat every applicant the same way. The system can size up, and you can decide, if we have some lenders today, some of our partners, some of them are just going after like under 300 loans, which other SBA lenders won't even touch, right? Because they're trying to exploit an area in the market they think has been underserved. But it really it goes to the strategy of the bank. Do they want to just take classic SBA loans? Do they want to go downstream a little bit, use a platform to go downstream, have some smaller loans? What do you want to ask of the borrower, right? And as some of these policy things that you had on the poll change, I think the SBA clearly is taking a position that they're trying to empower the lenders more to sort of feed off of their own commercial best practices, right?
Well, I think what you're offering, I mean, what would you rather have? $1 million loan or 10 $100,000 loans in terms of diversifying your risk? And we know what $1 million loan will make. We want to do those loans all day long. But if we can make those 10 $100,000 loans in a safe, prudent manner, quickly, speed to market, talk about diversification of portfolio and meeting client needs.
Yeah, and I think it's important now. You're seeing the war for deposits in general, right? Whether banks decide to increase their own savings rates to compete with, the Marcuses of the world or some of these other online banks, right? They clearly have less infrastructure costs, but it doesn't change the fact that it's very easy now to open an account at one of these banks, move your money around very quickly, and that's one of the things that accelerated the decline of like a First Republic, for example. Once the bad news is out there, everyone can move their money around a lot quicker than they used to. And in the same way, even if there's not an event like that, and someone's offering a great savings rate, there's no reason why someone couldn't open an account, and that's happening right now. So I think, if you think about SBA, it could even be an opportunity to, market SBA as a loan that you're offering to a new set of clients that you're not working with today, and that brings in that new relationship to the bank. And so I think all of these things factor in with what's happening in the market right now.
Well, I can't wait to see. It's fascinating to watch that. And we talked about technology. You and I haven't discussed this, so this is coming from left field. But how's this all going to look in 5 years? How much more is the technology going to, and the opportunities, how much more are they going to be available? And how does everyone compete with Chase?
Yeah, well, I think, banks strategically have to find what's working for them. Where do they want to carve out their way in the market, right? I mean, you're never going to compete from an asset standpoint, but, we work with some lenders now that really make SBA sort of the trophy product at the bank, and they just want to really own SBA. They think it's a great way to really market and build the business, bring in new relationships. So it's really, up to the bank. But my thought is in the next 5 years, I think you'll see the adoption of cloud even higher at lenders, whether they're banks or not, or alternative lenders, right? You have to. I think the use of scorecards, whether they're AI, the use of auto decisioning. Yeah, I think the availability of data that we can pull in the platform will continue to increase. So I think that's sort of where the market's headed. And then the SBA specifically, you can speak more to this, even beyond the current administration, like where do you think the SBA is headed? The next 5 years?
That's a great question. And obviously the SBA was, if you give me 30 seconds, the SBA was pushing very much to meet the competition or meet the borrower's needs for loans that they've been going to speed to market, fintech lenders, 24-hour type of things with getting rid of a lot of this stuff. Unfortunately for SBA, the rollout of that was extremely clunky. People lost jobs, and Congress was all over them because they failed to include Congress in that decision. I still think there's something fascinating there, and it'll be interesting to see on where they go with that. But if they continue down this road, SBA has said, hey, there's no reason why we cannot have a product that competes with these 40, 50% annual percentage rate in burdens for the small business borrower, and we can do it in a safe manner. There's a lot of people who are saying, no, let's go back to doing the way we've always done it. And bluntly, I don't think you can go back, Darren.
Yeah. No, we hear it a lot from clients too, where even coming out of PPP, the clients are saying, well, why isn't there a portal available, right? That's the way a lot of banks decided to do it. At least in the second round. Why are we going backwards, right? And so, I think there's sort of a resistance, especially with smaller banks, sometimes of just really embracing digital. Some, I think, are really making this an important part of their mix, and some are still, falling back on a classic way of doing things. But I think the important point is things are changing in the market, and there's a lot of opportunity also to really embrace digital. And technology has come down in cost a lot. The ability to integrate it, to take advantage of specialty systems, like ours for SBA, is out there, and it just requires the bank to have that forethought, right, and really investigate it and see if it's right for them.
You may have a slide on this, and I apologize if you don't, or if you do, show it. But I'm a chief lending officer, and I'm very fascinated by this. What are the 5 things I need to do or answer before that I should do as prep work, so I know in my mind what are the decision points that I need before I embrace your type of dashboard?
Yeah, a lot of times we speak with, heads of SBA departments or chief lending officers. It's not something on a daily basis, right? They're going internally, if it isn't an active project that's been greenlit, and really going and saying, hey, I want to procure a new SBA software for my department, right? It's not something they're doing that often, right? So I think the important thing is, how do you really think about the overall operational impact, right? A lot of times this is not something that is really being shared in a clear way internally. But if you think about, what's the opportunity cost? Do you want to grow the SBA side of the business? How, if you're using BDs, whether it's, partners or your own staff, right, are they very productive? We can do things like give them a broker portal where they have their own login, they can track their own deals. How do you make them more productive? And am I leaving opportunity on the table just because I'm not giving clients that accessibility either, right? And we talked about, so far, busy business owner, do they have to come in a branch? Maybe they want to apply at 11 o'clock at night on a Friday night because that's just when it's convenient for them. So really giving that accessibility is very important in the future, and especially now to win business. I would say assessing what's the time spent to gather all the information, right? Typically we see at least a 50% lift operationally on the back end only. So if you think about the overall impact, it's growth on the front end. It's what business is out there. What's the opportunity cost? Am I losing anything right now? It's, the back end efficiency gain. And a lot of banks really are not thinking about, what is my true cost per file for an SBA loan? And how much time is it taking? So if you think about, if I'm able to give you a 50% operational lift, where I'm getting all that information in much more quickly, don't have to leave the platform as much on the back, that's a real time savings and has a real tangible cost that is a very important part of the overall value proposition if you're developing some sort of ROI or sort of seeking a committee approval to get this really approved. And so as far as, we talked about cost per file, sometimes there's a concern with, hey, we use, another system and that system has all this data and that's where we use to underwrite a commercial loan, and how is your system going to talk to that system? And so the simple answer is cloud just makes it a lot easier to plug all these things in, right? We have to, right? We wouldn't be very successful at all if we weren't able to account for those things. And so every client has different needs. There's different systems, whether it's a document preparation system, it's let's say a document imaging system, it's Salesforce, it's their core, it's their servicing system. There might be a single sign-on that you want to give the clients the ability to log in and reuse their existing bank credentials. And all these things are options that we can build into our implementation. So all that flexibility is there. And so we see a lot of times that's where things may get shut down. There might have been a commitment to some older system. And the last thing I would add to that is, the market's changed a lot. I think the old way of doing things I'll speak to at least financial institutions, is I want to get everything from one provider. If I want everything from Fiserv, I want everything from FIS or Jack Henry. The problem is you really can't be great at everything, right? And the market is moving very quickly in terms of technology. And why not take advantage of the fact that cloud systems allow the ability to take additional specialists, that you can build out this stack of technology and each one specializes. And at least for our system, it's a subscription service, right? So if I'm not very good over time, I'm not going to keep that business. So we have to constantly update it. We have to keep it fresh. And because we have that concentration in that area, we're investing a lot in the platform and the technology to maintain the best in class of what we have. And so if you're thinking of the old way, it might be easier from a vendor management perspective. If I can just get one provider approved, then I can take everything they have. And maybe that plugs in, out of the box easier, but then you're sort of stuck with one provider, right? You're in bed with them long-term, and they might not be able to keep up with the pace of technology change out there. And you're sort of stuck with an old system, and that really hurts the competitiveness of the bank.
Yeah. No, I would
finally add app to front of it, right? People's expectations now are maybe not realistic, but if you can't respond to them fast enough, if you can't really get the whole client through processing in a timely way, they may drop out. And so we've seen at least a 10 to 15% improvement in clients, actually keeping, right, and maintaining the connection and actually taking the funds, because a lot of times, they might run out of gas and it just takes too long, and maybe they had another option and they went with it. So it really impacts that as well.
Yeah, excellent. And I would encourage all of you to take a step back, take some time and think about what markets do you want to go after in terms of SBA lending, and niche down and become an expert in that, and then utilize these resources to do that. I have the fun job of talking to a lot of lenders, and there's one lender that said, I will do every C-store and gas station I can. A lot of lenders won't touch it, but he says anything that sells the 3 food groups, nicotine, alcohol, and caffeine, I want to underwrite. So anyway, we're running out of time. Have we covered all of your talking points, Darren? You want to go right to summary, or is there something that?
I think we covered everything. I would say this is just a quick summary that really pulls together all the aspects that we discussed today. Obviously SBA has a lot of changes. I know you spent a lot of time on your calls, I'm sure, discussing them on a weekly basis. But I think in general, right, the mandate is expand access to capital, and more recently, right, what are additional flexibilities that they want to provide to help facilitate that, right? And I think technology is certainly there and available to help teams really become more efficient in the market. I think it's never been a better time, for SBA. I think at least coming out of PPP, a lot of people didn't know what the SBA was, right? They certainly know now. And I think in the current lending environment with, things being so tight, this is what the SBA was designed for, right? It's
absolutely.
Really just
You're absolutely correct.
Small businesses. And so why not double down on it? Why not take advantage of it? And I think the best way to do so, instead of adding staff, is certainly to take advantage of technology like Biz2X that's out there.
Yeah, grow your portfolios. It's designed to minimize your risk. Absolutely agree with you 100%. Hey, someone mentioned, we've recorded this conversation. It will be sent to everyone who registered on that. Also, we also live streamed it on YouTube. So if you're a YouTube person, you go to Coleman Reports the channel, you can view it there at your leisure as well.
If you want to take any last questions, I know we're kind of
say, Joseph, do we have any questions in the queue?
We're clear, gentlemen. Good job, Darren.
Very good. Darren, this is fascinating, and you really did a good job, and I appreciate the fact that it wasn't a sales pitch. I appreciate the fact that, hey, that you said this is an opportunity you have. Think about what you want to do, and we have a solution to help you do it. And I believe very strongly that you do on that.
Absolutely. And if any of the audience, would like to find some more information, we put out some great content on our blog. We have some ebooks about things like how to evaluate a lending platform, or even like how to calculate an ROI that might be helpful for the audience. And if you're interested in scheduling a call with any of our solution consultants, please send me an email. I put my email below here. Be happy to do so, even just for informational, just to learn a little bit more about how it works and see if it's the right fit and it makes sense for you. We'd be happy to set that up. So my email's below, and I really appreciate everyone taking the time out of their schedule this Wednesday to listen in. Hopefully it was interesting. More technology driven.
We're going to get you on our regular show as well, and do little 3 to 5 minute bite size as well. So you'll see more of him in the future. Thank you very much. Appreciate the comments. As you got a lot of thank yous, Darren. So we appreciate that. And this concludes today's webinar. Thank you.
Thank you very much.